Ever been told your credit score is the key to your financial future? That it's a fair report card on how responsible you are with money? Well, today we're going to pull back the curtain and expose the truth. Your credit score isn't a tool for your success. It's a carefully designed system of control. We'll dissect the math, the algorithms, and the hidden traps that keep millions of people in a cycle of debt, preventing true financial freedom. This isn't just about numbers. It's about reclaiming your financial sovereignty. Start with the biggest lie, the illusion of control. You're told to aim for a good score, maybe a 750 or an 800, but who decided that number was good? It's not some universal law of finance. It's an arbitrary benchmark set by the very institutions that profit from your debt, the banks, the credit card companies, and the credit bureaus. They set the rules of the game, and the rules are designed to be fragile. Think about it. You could be financially perfect for years, but one single late payment, maybe because of a postal delay or a simple mistake, can send your score plummeting. Your score can drop dozens of points overnight. Why is the penalty so severe? Because a system built on fragility keeps you anxious and compliant. And worse, the algorithms that calculate your score are a complete black box. They are proprietary trade secrets. You can't see the exact formula, so you can never be certain how your actions will impact your score. This isn't transparency. It's intentional confusion. It fosters a sense of dependence, making you feel like you constantly need to play their game without ever truly knowing the rules. Now, let's talk about the engine of this trap, the debt treadmill. This is where the math really starts working against you. Your credit score directly determines your interest rate. A lower score doesn't just mean you might get denied for a loan. It means the loans you do get are outrageously expensive. The difference between a prime interest rate for someone with an 800 score and a subprime rate for someone with a 600 score can add up to tens or even hundreds of thousands of dollars in extra interest over a lifetime on things like a mortgage or car loan. It's a wealth transfer, straight from your pocket to the banks. And it's not just about interest. The system is loaded with hidden fees that specifically target those with lower scores. Late fees, annual fees for subprime cards, over-limit fees. These penalties create a vicious cycle. Imagine you're struggling to make a payment. You get hit with a late fee, which increases your balance. That increased balance accrues more interest, making next month's payment even harder. It's a snowball effect. A small credit card balance of a few $100s can quickly spiral into thousands in debt. Not because of reckless spending, but because of a system designed with predatory fees and high compounding interest. You're not just paying for the money you borrowed. You're paying penalties for being in a tough spot in the first place. This system doesn't just control your access to money, it controls your access to life itself. This is what I call the scarcity game. A low credit score has become a barrier to basic necessities. Trying to rent an apartment? The landlord will check your credit. Need to set up utilities like electricity or get a new cell phone plan? They'll run a credit check. Some employers even check your credit history as part of the hiring process. Suddenly, a number meant to evaluate your risk as a borrower is determining whether you can have a roof over your head or get a job. This creates a powerful incentive to participate in the credit system, even if you don't want to. It's incredibly difficult to function in modern society without a credit history. The system forces you into the game, making you dependent on their rules. Of course, the financial institutions profit from this manufactured scarcity. They've created a tiered society. Prime borrowers with high scores get the best deals and perks, while subprime borrowers are seen as a high-profit market. They know people with lower scores have fewer options, so they can charge them higher rates and fees, extracting maximum profit from those who can least afford it. So, how exactly do they manipulate you mathematically? Let's break down the algorithm's dirty little secrets. The biggest factors in your score are payment history and credit utilization. Payment history seems fair, right? Pay on time? But credit utilization is where the real manipulation happens. Utilization is the percentage of your available credit that you're using. If you have a $10,000 credit limit and a $3,000 balance, your utilization is 30%. The algorithm heavily penalizes high utilization. Here's the trap. Let's say you make a large purchase on your credit card, maybe for $5,000, fully intending to pay it off when the bill comes. But if the credit card company reports your balance to the bureaus before you pay it, your utilization spikes, and your score can tank. The system is essentially punishing you for using the credit you were given, even if you pay it off in full every month. What does this encourage? It encourages you to carry a small balance from month to month, never fully paying it off, just to keep your utilization low. And when you carry a balance, what happens? You pay interest? The math is designed to push you toward behaviors that are most profitable for them, not what's best for you. The entire system is built to benefit from your slip-ups. It's using mathematical penalties to keep you right on the edge, perpetually paying into their pockets. But here's the good news. You are not powerless. You can break free from this trap and reclaim your financial sovereignty. The first step is to minimize your reliance on credit. It starts with building an emergency fund. Having 3 to 6 months of living expenses saved in cash means you, Dan T., have to reach for a credit card when an unexpected car repair or medical bill comes up. This single step breaks the cycle of debt. Next, focus on increasing your cash flow, whether that's through a side hustle, negotiating a raise, or cutting expenses. More cash on hand means less need for credit. Then, start exploring alternative financial tools. There are fintech apps and credit unions that offer services without relying on traditional credit scores. Look into secured credit cards to build credit without the risk of high-interest debt. Or use tools that report your rent and utility payments to the credit bureaus to build your history positively. Don't have to play by the big bank's rules. Finally, empower yourself with knowledge. You have the right to a free credit report from each of the 3 major bureaus every single year. Get them. Scrutinize them for errors. Surprising number of credit reports contain mistakes that can be dragging your score down. Dispute every single inaccuracy. The law requires them to investigate and correct them. By challenging the data, you are actively shifting power back from the institutions to yourself. This isn't just about improving a number. It's about understanding that you are in control of your financial destiny, not a secret algorithm in a server room. The credit score system wants you to feel small and confused. Don't let it. Thank you so much for watching. If this video opened your eyes, please hit that like button and subscribe for more content that empowers you to take control of your finances. Let me know in the comments what your experience with the credit system has been. Let's break this system together.